Welcome to a voter's guide to municipal finance. This guide was created by the League of Women Voters Acton Area Chapter.
Over the next 10 minutes, we'll do a quick overview of a town's expenses and revenue, and then we'll discuss Proposition 2.5.
We'll also talk about property taxes, how they're calculated, and how they're impacted by Prop 2.5 limits and voter overrides.
First, let's discuss town expenses.
So the town budget is brought to town meeting every year for approval. That budget covers all expenses for the town, including public schools, police, fire, DPW, and all other town departments and services. The budget also has to cover any principal and interest payments on town debt, as well as some charges levied by the state for things like charter school tuitions and state services.
So, in most towns, public schools are the largest expense. So, where do towns get the money to pay for these expenses?
So towns do get some aid from the state. Some of that aid is earmarked for specific uses like education, and some of the aid is unrestricted. Towns also assess fees for some services, and many towns levy a Community Preservation Act, or CPA, surcharge for open space, affordable housing, and recreation. But property tax is the largest source of revenue for a town, and that's why we're going to do a deep dive into how a town's property tax is determined.
So, property taxes are constrained by Proposition 2.5, which is a law that was enacted in 1980 that limits the amount of property tax that a town can raise in a year.
But at town meeting, voters can override the limit set by Prop 2.5.
So, the tax levy is the amount of money that a town intends to raise from property taxes in a year.
Now let's dive into how that tax levy is calculated, starting with the tax levy limit. Every year, the Massachusetts Department of Revenue calculates a tax levy limit for each town. That calculation is governed by Proposition 2.5. It starts with the previous year's levy limit, then they add an automatic 2.5% increase, and then an amount for new growth in the town is added. New growth is all of the new development and significant property improvements that have happened in the town in the past year. That new development will result in additional property taxes for the town.
So, this levy limit is the maximum amount that a town can raise through property taxes unless the limit is overridden by voters.
Municipal budgets must be balanced. Expenses cannot exceed revenues.
So, what does a town do when they're planning their budget and their projected expenses exceed their projected revenue?
If the problem is temporary or fairly small, the town has a few options.
So, they can raise fees for town services, but the fees that towns can raise are constrained by state laws.
The town can use short-term borrowing to cover a gap in anticipation of state or federal aid distribution or other revenue that's going to come in.
And they can take money from their reserve accounts, but taking funds from some reserve accounts requires the approval of town meeting.
So small short-term needs are fairly easy to address, but what if the town needs to build a new high school? That's a big project that will require long-term borrowing, probably a loan for 25 or 30 years. In that case, the town needs to raise the money to pay the principal and interest on that loan. A debt exclusion override allows the town to increase the town levy, raising more money from property taxes by the amount needed to pay principal and interest for the duration of that loan.
So, while debt exclusion borrowing raises the tax levy, the amount of property taxes that get collected in a year, it does not impact the levy limit. These are often called debt exclusion overrides, but the increase in the levy, that is, your property taxes, is temporary. It's just for the duration of the loan. Because the increase is temporary, it is not included in the calculation of the levy limit. So, debt exclusion borrowing requires both a two-thirds vote at town meeting and a majority vote at a townwide election.
Sometimes towns have a revenue gap that's ongoing. More money is needed to fund education and town services for the foreseeable future. In that case, the town has two options. The town can reduce spending, or the town can do another type of override that is a permanent increase to the tax levy. Cutting essential services such as police, fire, and DPW is difficult without impacting safety. And other services like schools and recreation are integral to the quality of life in the town.
Reducing the services that the town provides may have an impact on property values, and they may result in town staff reductions.
The second option the town has is to pass an operational override. This type of override permanently increases the tax levy limit. Remember that the tax levy limit is where the calculation of property taxes starts every year.
An operating override requires both a majority vote at town meeting and at the ballot box.
Now that we know about overrides, we can finish the calculation of a town's annual tax levy.
So the maximum town tax levy is calculated by adding voter-approved debt exclusions and any operational override that occurred in that year to the tax levy limit.
Now that we have the tax levy, we can calculate the property tax rate. We'll try to keep the math simple here. If the town needs to raise $100 million in property taxes to cover its expenses, and the property in the town is assessed at a total of, say, $5 billion, we have a tax rate of $20 per $1,000 of assessed value.
Note that some towns have different tax rates set for different classes of property, and the calculation shown here would be modified to show the different rates for the different classes. So now that we have our theoretical $20 per $1,000 of property value tax rate, let's take an example. Let's assume that your house was worth $400,000. You would take 400, which is the number of thousands that there are in the value of your house, and multiply that by the rate, $20, and you'd come up with $8,000, which would be your property tax for the year.
Good job.
Thank you.
Okay, to sum up, this was a lot of information, but the key terms to remember are tax levy, the amount of property tax that the town needs to raise to cover expenses in a year. The tax levy limit is the start of the tax levy calculation, and that is governed by Proposition 2.5. To that levy limit, we then add any of the current debt exclusions that cover principal and interest payments on long-term loans, and if necessary, the voters can decide to permanently increase the levy limit with an operational override. We hope this guide has been helpful. If you'd like to learn more about municipal finance, the Massachusetts Division of Local Services has a series of in-depth videos on all aspects of municipal finance.
So thank you for watching, and we hope to see you at town meeting.